Namaste, traders. Welcome to Code Trade Academy. Today, we're going to talk about one of the most powerful tools in technical analysis. Chart patterns. You know, chart patterns are like the secret ingredient in your favorite recipe. They can make all the difference between a profitable trade and a losing one. And the best part is, they're not that hard to learn. So, buckle up, and let's dive into the world of chart patterns. We'll cover the basics, and then we'll dive deep into the most popular. So, what are chart patterns? Simply put, chart patterns are shapes that form on a chart when the price of a security, like a stock or a currency, moves in a certain way. They can be used to predict the future price movement of the security. And they're a key part of technical analysis. There are many different types of chart patterns, but some of the most common ones include reversals, like head and shoulders, and continuations, like triangles and flags. Reversals are patterns that form when the. Now, let's dive deep into some of the most popular chart patterns. First up, we have the head and shoulders pattern. This pattern is a reversal pattern, which means it forms when the price is about to change direction. It's called a head and shoulders because it looks like a head with two shoulders. The head is the highest point, and the shoulders are the two lower points on either side. When you see a head and shoulders pattern, it's a sign that the price is about to drop. Another popular pat. Now, let's look at a real example of how to use chart patterns in trading. Let's say we're looking at a chart of a stock, and we see a head and shoulders pattern forming. We can use this pattern to predict that the price is going to drop. Here's an example of how we can use Python code to identify head and shoulders patterns. Import pandas as PD. Import matplotlib. pyplot as PLT. df equals PD. read_CSV. stock_data.csv. plt. plot. df. close. plt. show. This code imports the necessary libraries. Now, let's talk about some pro tips for using chart patterns in trading. First, it's essential to combine chart patterns with other forms of analysis, such as fundamental analysis and technical indicators. This will help you confirm your trades and avoid false signals. Second, always use proper risk management techniques, such as stop-loss orders and position sizing. This will help you limit your losses and maximize your gains. Third, stay patient and disciplined. Chart patterns can take time to. And that's it for today's video on chart patterns. I hope you learned something new and useful. Remember, chart patterns are a powerful tool for predicting price movements, but they're not a magic formula. You need to combine them with other forms of analysis and use proper risk management techniques to succeed. Don't be discouraged if you don't see immediate results. Trading is a journey, and it takes time and practice to become a master. Keep learning, stay disciplined, and always keep a positive